Hello folks, I'm L.A. Little and this is your weekly TA Wrap, where we take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened last week and what does it tell us about the coming one. I do the show once a week, every Sunday night live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. I'm glad a few of you could join me tonight. It's the market's kind of, I think, putting everybody to sleep doing what it normally does, and that is hang and grind and try to find a way to move higher. It's been that way for a long time, as you know. I mean, it's been 15, 16 months. Actually, it's been longer than that since we had any kind of a serious pullback or a pullback of size. Last year, I think, top to bottom, the top tick to the bottom tick in any kind of a pullback was like maybe 4%, potentially 5%. It certainly wasn't any more than that. So when you get that kind of a steady grind higher, it's pretty hard, very hard actually, to get anyone to think that anything different can happen. So let's get started here and see what we got. And we're going to start up with the S&P as usual. And once I get this zeroed in, so what's happening with the S&P and why are there issues or not issues? I would have to say, to start with, Friday was kind of disappointing. Now Friday, maybe it's an anomaly, but you can't really just tack that on because it was options expiration. You have to look at the market and say, okay, what did it do independent of what the circumstances were, right? Did it do what it should do? We went up, we tested this high. This is the S&P 500. We failed on price, but we actually succeeded on volume. And now we're drifting back down, right? And as we drift down, we're back into this big bar, this big down bar, which we actually saw a takeaway bar the next day. And we're into it, and volume expands a little bit as we get into it. We're into the bar now. Okay, so that says that, if you stay there a bar or two, and especially if you dig deeper into it, if you get down in here somewhere, you're probably going to try to reach the other side. And as we know, the other side on this particular index is the retest region that still has yet to happen. So they jumped the gun. They jumped on it quick. They took it right up back to the highs. Now they're drifting back down. This is the target on the downside if we're going to get the downside. But that doesn't mean we're going to get the downside, right? That's just the target if, in fact, we do start to break down. Right now, this is basically a big range. You've set up a large range now. You're kind of in the upper half of that range, and you're trying to dig back down a little bit. So S&Ps really don't really tell you anything. If I look at them on the weekly doesn't tell me anything, right? You dug into that big bar. If the weekly tells me anything, it simply says, hey, we went into the big bar up, which was the quad witching Fed meeting week, which had a lot of volume on it. We went into that bar. Top of it was 1823 3/4. We went into it, got into it, had less volume, flipped around, and we're holding, right? So 4 weeks sideways, a month basically sideways so far. That's the S&P. If I look at the Dow really is almost the same case. You can see here 4 weeks basically sideways. You had the same sort of a pullback on the Dow. Now the Dow on Friday was slightly different in that you had, I think there was like 4 or maybe 5 stocks higher in the Dow, yet the Dow was up while the other indexes were break even to lower. And actually I believe they were all down except for the Dow. And why was that? Well, because you had a couple stocks inside the Dow that were holding it up, in particular these two, AXP, which actually didn't do so well by the end of the day. This is American Express. They reported earnings, popped higher. What really got the Dow going, though, was Visa. Visa is the largest weighting, largest cap stock in the Dow. We recognized this in our trading room on Friday. and traded into it and got a nice big pop out of it. But Visa, this was just about, I believe, accounted for all the Dow points. So the Dow, being capital weighted and only 30 stocks, can actually move quite a bit independent of, you know, the majority of the stocks. So Dow pushes higher, S&P comes back into the big bar. Neither one of them telling us anything. Where the signals are right now is not in the listed issues. It's over here in the over-the-counter issues, and in this case the IXIC pulling back, pulls into that gap down area, the top of that gap up bar, or the top of the bar that preceded the gap up, 41.83.84. We get down to 41.87, so we just missed it. It looks to me like it's going to try to close the gap tomorrow. And if I flip over and look at the index, the NDX 100, where Apple was weak and a number of others were struggling, the NDX 100 is coming back, and what is it doing? You broke over a swing point high here, you're coming back to do a retest regen. How fast are you doing it? You're doing it immediately. You're coming right back within 2 bars. Okay, so if I'm coming back fast, what's my odds? They're not that great. They're okay, but not great. It was a confirmed breakout. That makes the odds a little bit better, but this is going to retest and try to regenerate higher off that bar. There was no volume on that bar, so the volume really is here on the breakout bar. That breakout bar, let's get a number on it. You got 21, and you're coming back with 24. Excuse me, I think 21 you're coming back, 21 and a half. So you're coming back with about the same amount of volume that you went up with on the breakout. This is where the test is, and the other test is on the Russell. And on the Russell, you have almost an identical situation. You have a swing point high here. That swing point high, that gives you a retest regen zone. You're coming right back into it. The high on the swing point is 1167, almost 1168, and you come into 1168 bar. You got the 6676. Volume on the way back 362. The breakout bar had 377. These are the tests. If you want to look and ask yourself, okay, is this going to break out? Is it going to break down? This is your test. Can it break out? Can it break down lower and fail to retest and regenerate higher? Now remember, there are ABCD structures on all of these in place. You know, the one on this one is about to here, right? And if I go look at the numbers on all these guys, you know, they're not large numbers, but they're still higher numbers than what we're printing right now. On the Russell, it's another 4%. On the S&P 500, it's about 3. Those are on the dailies. On the weeklies, it's a little bit more and a little bit less depending on what you're looking at. The Russell's almost done on the weekly. And what's fascinating is if you look at the monthlies are done on almost all of these. So if I pull up the monthly here, and I want to look at the monthly in terms of its ABCD structure, you know, on the monthly here, the monthly went something like this. Let me find my numbers here, right there. So the monthly went to here, back down, and then back up, and as you can see, the monthly's done, right? This is already extended. And that's true of almost all of them, right? So you're extended, you finished off monthlies, you haven't finished off your dailies, you're doing a retest regen. Folks, this thing is stretching, it's struggling, it's start of the year, and it's having a hard time. Does that mean I want to short it? Does that mean it's going to break down? Not necessarily. I mean, you have to go with the trend, and the trend's still up. But you have to recognize that the probabilities are not nearly as high as they could be, and as a result of that, you don't want to get overextended in terms of your trade. Okay, so let's look at the so that's the S&P, that's the the indexes themselves. I'm going to pop over to the world markets and pull those guys up because they're actually still behaving. If I look in Europe, Europe is up here testing highs. This is the French CACs, which I believe is about the weakest one out there, or has been the weakest one out there. The FTSE is there, right, pressing against the highs, trying to break out. The German DAX has already broken out, and even though it's struggling a little bit here at the highs, it's still at new highs. So Europe, new highs. But if you go over to Asia, Asia not new highs. The Nikkei, even though the Nikkei's up near the highs, it's been pulling back, as you see there. The Hong Kong index definitely pulling back. This thing's still trying to test this low. Right now it had a little ABCD structure up and held, but it finished it off. So we'll see what it wants to do on the next attempt, right? Because that's pretty much done. Hong Kong, Shanghai, testing 2,000 still. 2,000 is where it was trading 4 years ago. These markets in Asia, you know, they're struggling. They're struggling. And if you go to other places like Brazil, Brazil's breaking down. You know, it can't hold price. Here it comes back in trying to get to the swing point high. I mean, the swing point low, the high of the swing point low. You see it right here testing. Just ABCD after ABCD to the downside, one after another, right? Just keep doing them, bang, 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 all the way. And you got, you know, you got another one here that finished there. Now you got another one that's going to try to break lower. It's been this way all the way down. And when you see trend like that, that's trend. These are telling you what the trend is. The trend is bearish. Right? The trend is bearish. It's telling you that, and you have to respect that. Bearish trends are not ones you want to buy in general. All right, let's go to the sectors. I looked at the sectors. The sectors don't tell me a whole lot. If I have a little time, I'll come back to them. What I want to do is flip over to the Ox markets because I didn't do much work there this morning, so I want to see what these guys look like. Let's start with the dollar itself. So let's see what the dollar is up to. So the dollar got volume and broke over the high. Didn't know that. I guess that's why we look at everything. So this was a little nested ABCD structure, right? And it's trying to push up, and you've got a larger one in effect to here, right, that takes you up a little bit higher. Looks to me like it's going to try to push up at least into this area. You got a breakout here. You can see it on the here on the daily, on the weekly. If you come over and look at the weekly, that's that high, which is this one up here. It's trying to push up into that area. The dollar getting stronger should be weak for gold, but you know what? All of a sudden, gold and the dollar have divorced, and one does not follow the other. In other words, the gold doesn't get weaker when the dollar gets stronger, and vice versa. For whatever reason, that relationship to some degree has shifted. ABCD structure here gets you up a pretty good piece, right? Certainly gets you up to test this high at least. So it's up there trying to get to that, potentially getting up to the higher high. The one thing that you have to notice on a lot of these now is that you're getting nested ABCD structures. If this breaks, right, you'll have two cases of this thing, you know, finishing in about the same place. Nested ABCD structures create higher probability trades. Anytime you have multiple structures pointing to the same direction, that becomes more and more of a magnet, a target that has a higher probability of being reached. And if this breaks over and it's right at that high tonight, you know, if it breaks over it, that would give you another structure inside the larger one that's already there. Silver, got the same case, exact same case here. you can see the ABCD structure here, right, to there, and then you got another one inside of it potentially, right, that would take you a little bit even higher, and it looks like that would be the target on that one. Okay, so where is the bonds? Here they are. We'll start with the long-term bonds. I want to see what bonds are doing. So bonds were breaking out, and they did. And now bonds did the same thing. What we were just talking about, you had kind of the same case here. You had ABCD structures, right? That one finished. Now you got a new one that starts, right? And that one takes you up quite a bit higher. Looks to me like you're getting over swing point highs here. You don't have them on the weekly, but you have them on the daily. You have two of them, and you can see it's already broke through both of them. Thursday and Friday, broken above them. You can always pull back a little bit, but it looks like the target is up in this area where that resistance zone is. So bonds trying to head higher, and the long end of the curve is getting more strength than the short end. So if I come back in, where is the shorts? Here we go. So like this 3 to 7s, they're not even at the highs, the swing point highs. Very different picture. Okay, quick look at copper. I haven't looked at it in a long time. And then let me take a couple of questions. I had some emailed to me. Copper's still in a big range trade, still hasn't changed. Let me look real quick. I want to see what the ag sector looks like. Still can't go. Just deflationary price pressure on the ags. Okay, let's go take some questions. So I had 2 questions emailed to me. Let me take those first, and then I'll take your questions here on the boards. So the first one had to do with Michael Kors. Michael Kors is in the retail sector. I actually put up an article. Did an article. If you have some time, you might want to check it out. And that is these exchange-traded funds drawing false conclusions. It was about the whole ideal of you have to be careful what you're looking at, and in particular, if we're looking at cores, let me switch over to like the XRT, which is apparel, which is what cores is in, although it's high end. You can see the weakness in that sector, right? And that sector's, about a quarter of it is apparel. And so if the apparel sector is having trouble, right, that's going to make it harder for something like cores to work higher. So you have to realize that, stocks are in sectors in the market, and they do have a tendency to pull one another, and that's true here as well as anywhere. So cores, so what do we got here? He wants to get an entry point. What would an entry point be? Well, if I'm looking on the daily, I've got an ABCD structure, and it hasn't quite completed. Looks to me like another buck down or so here in this area. Got a bounce, doesn't look that strong. Oh, look at here, I didn't notice this. It broke multiple swing points on the downside. Got a little bounce, even though it did, and then it did the escalation to the downside. So that, when you see that, the first thing you have to tell yourself, or actually think, is okay, when it comes back, the first thing it's going to do is it's going to retest and try to regenerate. What did it do? It came back immediately, right? That was this bar here, these two, and what did it do? It regenerated lower. So now that retest, that regen, is already taken place on these two, and looks like it took place on this one as well. So really, at this point, it's just resistance. Okay, so this resistance zone is here. You got a big bar down. You don't have any big volume other than here. Yeah, that looks like pretty good resistance. That's going to be tough to get over. So, if that's going to be tough to get over, what does that do? That sets up the potential for another ABCD structure to the downside. So if I'm looking at cores on a daily now, I'm looking at this, right? That one actually completed. That gave you the bounce, and then you got the bigger one we just showed, which will get you down farther, right, from here all the way down to there. I would want to look at cores down in this area. So let's see where that is on the weekly, and yeah, it looks like it will try to make it down to that. The bottom is 73.26. Over here you got 72.53. So somewhere between 72.5, 73.25. That's the ideal area right in there that you want to try to attack and get. So that's where I would be looking. Actually, it's a little bit lower than what you see here, just slightly lower. Okay, so that's the price point. Will you be able to get it at that price point, and do you want it? Well, right now it's earnings season, so you have to be careful what the earnings look like. Let me flop over here real quick and see when earnings are for cores. Looks like about Feb 5th, the 5th, and so that's about 2 weeks. So, you know, even if you get that entry down on this price point, you can't back up the truck, right? You got to be kind of careful and buy just a little bit. And cores, you know, it's been a strong stock. It's probably range trading up here, and if so, that's buying the bottom of the range. That's what you want to do. But realize you got earnings coming out. Earnings aren't good. You know, on a weekly basis, you know, this thing could come back. It never has retested and regenerated off this swing point break in this area right here, right? So that retest regen is still a possibility. So if you're going to buy it up here, realize you could take it all the way down to here. So you're going to have to come up with a plan as to how you want to do that. Are you going to trade it intermediate, or are you going to trade it short term and have a higher probability stop out? And that's what you got to look at. Personally, I'd wait until the earnings came out. I wouldn't try to front run this thing. Another question here is about Twitter. So let's take a look at Twitter. All right, so Twitter, new issue, you know, went public, I don't know, 3 months back or so. Yeah, about 2.5. Big bar. Well, the first thing you notice here is the big bar, right? You got volume at the highs here on this big bar, and if I look on the daily, you actually got it there as well. So that's a good thing, because usually when you see that, it's going to try to go back up there and get it at some point. So that's the first thing. Second thing is the way this shot up. You know, given this move up, right? You did an ABCD structure up. You finished it off up here. It makes sense to come back to the area that you had your ABCD structure, your B and your C points, and that's exactly what it's done. It's come right back into that area. Now the key is going to be will it come lower or not? Let me clean this up and look at it from that perspective. From that perspective, you had ABCD structures to the downside. One here, completed. Now, you're getting a bounce. What does that potentially do? Sets up the next one. This was a breakout. Yeah, I'm not sure why we didn't get the arrow there, but that looks like a breakout to me. That is 45.67. So it broke out. So it never did a retest regen. That retest regen would be way down here. Okay, so I think right now the jury's out. I don't think you can buy it. You got to you got to do one of two things. You either got to make it break out on the top, which I think is going to be very hard to do, or you simply got to wait a little bit longer and either let time solve this problem out here somewhere, right? Or let it dig deeper back into this retest regen. If it were to come back, more than likely it would be bought in a heavy way into this area. That would be the ideal spot. So I would be waiting to see if I can get it back here. The price point in that area is 45 and a half. So that's where I'd be looking for it. Okay, that's Twitter. And also, let me see when the earnings are. What's the earnings on this guy? Earnings look to be the 4th. So another week and a half there. Again, wouldn't do anything in front of the earnings. Let's look at one on the boards here, AVGO. AVGO, what do we got on this one? Okay, so this was one that we had in our portfolio for quite a while. Unfortunately, we left it and didn't stay with it, and it continues to be strong. So it's coming back in to do a retest regen off of this bar. It can get all the way back to the bottom of the bar, right? So the first thing you got to do is see how it comes into this bar. Right now it looks positive. It looks like it's a buy. What's the earnings on this one? 24th. Looks to me like you don't want to trade in front of the earnings on this one either. This has had a huge run, right? I mean, you just go back to these lows. That's May, you know, when everybody else did its thing back then. I think it was selling at 30 bucks. Now we're at 55. You know, my math's not that quick, but that to me looks like almost a double. And it did it straight away. And it looks to me like, just a quick glance here, is you had ABCD structures completing on the way up. Here's another one. And that one's also completed. So there's multiple reasons here telling me not to play with this thing. If you're going to play with it, make it come back down here and play with it. Don't try to buy it up there. The intersection of those two bars is where you want to buy it. And if you don't get it there, you just find another trade, right? There's always places to put your money. You know, you don't want to buy up here and then take a $5 hit, you know, or whatever the number is, or $2-3 bucks. Okay, I'm about out of time here. Tomorrow we're off. Asia's trading tonight. You know, we have at least a consolidation taking place again. It could break to the upside, looking at the SPX, or it could break to the downside. The key is over in the Russell and the NDX. Those are the guys to watch when we get trading again on Tuesday. They're the ones who will tell us likely what we're going to do. So that's my thoughts. That's where I have to leave it tonight. I appreciate you being there, folks. Have yourself a great night, and you know, another day of holiday here. And I will catch up with you when? I'm not sure. When am I going to catch up with you? I think I'm going to catch up with you on Tuesday. I'm off tomorrow, so Tuesday will be the day. All right, have a great night. Take care, and I'll see you next time. Good night, folks.